Good morning, everyone. Good morning. Hope you guys are doing well. Today is Wednesday, September the 17th. Very big day today with FOMC statement later on to the session. That's going to be at 2 p.m. Eastern Standard Time. So that's really going to be big for the overall markets. We'll talk about this a little bit more here. We'll go over some charts coming into today as well. And then, of course, we'll talk a little bit more about FOMC here. What's up, everyone? Good morning. Good morning, Jeff, B Roots, Monty. Let me actually just fix my microphone. Good morning, Victor, Wayne, Robert, Ryan, Jen. Good morning, Cinna, Chris, Vate. Good morning, James, Willie. Good morning, Hartik, James, Captain, Detecto, Majid. Good morning, I am True, Martin, 50, Felipe, Miss Reggie, Robert, Daniel, Patrick, Ted, Chris, Wealth. What's up, everyone? Yeah. Good morning. Hope you guys are doing well. Let's pull up the Forex Factory here, and then we will go over some charts. So coming into today, as you can see here, the major news event that we have is FOMC statement. So we'll talk about what we're expecting at least coming into today. So we have a major red folder news event at 2 p.m. Eastern Standard Time. Most likely the Fed is going to cut rates. We'll see what happens. Anything can happen, of course, with these events, but very likely that we will cut rates finally, potentially 25 basis points. So we have FOMC, and then we have the FOMC press conference that's going to be at 2 p.m. 2:30. So usually we have a nice reaction at 2 p.m. and then we'll have a press conference where Jerome Powell is speaking. That's going to be at 2:30, and then tomorrow we do have unemployment. So those are the major red folder news events coming into today. We've been waiting for this for a while now, at least the last week along with this week here. As for the charts, we'll mark out some charts and the levels that we're looking at coming to today, but most likely, right, the markets are just going to wait for FOMC. A lot of the times whenever we have these big red folder news events, we usually consolidate before then. There are exceptions, but majority of the time, we will consolidate or will be a little bit more choppy pre-FOMC. So let's go on to the 1 hour time frame. So key levels for the NQ coming into today. So we're just going to have this marked out. Let's actually just go back into the 15-minute. So key levels that we have marked out coming into today is just going to be the high that we created here this is on Monday, and then we have Tuesday's price action here as well. So you can see this is your Monday's highs. We had a nice push up on Monday, broke above it here in the overnight session. And then yesterday, we immediately dropped right back towards the downside, got back underneath that previous high that we created here on Monday. And I can see how many touches we've had off this level. So for the NQ coming into today, key levels that we can have marked out, we can just mark out this key level support. And then as for your resistance level, it's going to be your Monday's highs along with multiple touches from yesterday here as well, which is that 24,560. So that's the key level here for the NQ. If you want to see any sort of upside, right, it's really going to be the break above your 24,560. You could also be looking for the bounce here as well, but primarily it's going to be the break above hold for a continuation towards the upside. As I mentioned, most likely it's just going to consolidate for really this morning session until we have FOMC later into today. So regardless, even if it did break above, you want to be very cautious just because we do have a major red folder news event later into the session. So you can have this level marked out. Let's also mark out this level here as well. And now we can just have these levels marked out for the NQ. As for the QQQ, the key levels that we have marked out in this case, similar thing here. We can actually just refine our levels, but for the QQQ key levels yesterday that we have marked out was our Monday's highs. You can see how many touches we've had here on Tuesday. Also in the pre-market as well, exact same game plan as the NQ. Let me just adjust this. So the key levels that I have marked out 590 along with your 590-150. Basically exact same game plan. If it comes back down to the low of the range, you can be looking for the mean reversion back up in towards your 592. Another scenario, break above your previous day highs, hold for continuation towards the upside here as well. This is also a possible scenario for the QQQ. Now we can also mark out some downside here as well, since now we have FOMC. Everyone's expecting the Feds to cut rates. Potential downside now for the overall markets is a rejection off of your 592. Or I personally like to see it underneath. Now it's going to be this 590. If you can get underneath 590, stay heavy. Potential short is in play for a pushback down in towards this 588. So 590 along with this 592 is going to be key here for the QQQ and the NQ coming into market open. As for the ES, similar thing here, key levels that we have. ES is actually a little bit weaker than the NQ. As for the levels that I have marked out, it's your Monday's highs. So you can see Monday's highs was very key coming to yesterday, broke underneath, and then we actually ended up having an immediate retest for continuation towards the downside, and actually came all the way back down in towards your Monday's lows. So for the key levels now that I'm going to have marked out for the ES, I'm just going to mark out last week's key levels, which in this case is your Thursday's highs, along with basically your Friday's highs here as well. So you can see for the ES, we end up coming all the way back down in towards those key levels. Now moving forward, what I like to see is a reaction that we have off this level here for the ES. If we can maintain above your 6,600, we can see this continue push back towards the upside. Ultimately, if we do break underneath this key level, right, there is possibility we could see some more downside here on the overall market, since right, we have a lot of actually liquidity built up towards the downside. If the numbers come in bad, or if something, or if a surprise happens coming to FOMC, we could potentially see a reversal here in the overall market. So those are the levels that I have marked out for the ES coming into today. As for the SPY, key levels that I have marked out is your 661 along with your 659. So these are the key levels here for the SPY chart. Once we got back underneath, you can see a nice push down in towards that 659. Now the key levels coming to market open is just going to be your high that we created, 661, along with this 659. So you can actually just remove this one. If we want to see some upside here for the SPY chart, we like to see really buyers step in off this 659 for a potential pushback. For a potential pushback towards the upside. Another scenario, right? We kind of just push right off the bat, just come back inside of yesterday's range. Longs will look best either a low risk off your 659, or it's going to be above your 661 here for the SPY. As for potential shorts, either rejections off of your, now it's going to be essentially your all-time high 661, or now it's going to be the break underneath your 659 for continuation towards the downside. What's more likely going to happen, right? We can kind of just draw your high and low here. There's a very good chance that we just kind of consolidate in between this range until 2 p.m., which is going to be FOMC. So if we just kind of stay in between this range from yesterday, along with Monday's range here as well, I'm going to be a lot more hands off just because we do have that FOMC statement later into the day. So regardless, we're going to be a little bit more patient today with FOMC later on to the session. Now let's go on to some of the tech names that we have coming into today. I'm going to grab some water here as well. What's up, everyone? Good morning. Hope you guys are doing well. Yeah, FOMC today is FOMC is today, so it's very big. Basically the game plan, we'll kind of talk about a little bit more in depth, but we're gonna be a lot more cautious just because we do have FOMC statement. We'll let really the first kind of 30 minutes develop. If the market's gonna consolidate, then most likely it's not gonna do anything until 2 p.m. because a lot of the times markets are just waiting for a big news event like this. So everything else is essentially just going to wait as well. So usually we wait, and then the bigger moves happen after FOMC, and then of course tomorrow and along with Friday as well. So that's what we have. Also, what else do we have here as well? Let me actually just go on to some tech names. Before I get into the tech names, if you guys are enjoying this, appreciate if you guys drop me a like. If you guys haven't joined the daily watch list, that one is in the description, of course. If you guys haven't signed up for the event at the end of the month as well, that one's also in the description. All right, let's talk about Tesla here. So Tesla has just been consolidating this week so far, another inside bar day. So key levels that we have marked out is going to be your outer bar, which is essentially your Monday's highs and Monday's lows. And then yesterday we had an inside bar day. So this one's consolidating, but still very bullish here on the higher time frame. So as you can see, nice push up, really. And now you can see higher lows are being built. What we like to see really now on Tesla is really higher lows be built, and then eventually we have that continued pushback towards the upside. So that's what we have for Tesla coming to market open. Key levels that we have marked out is essentially this 416. So it's a 416 key level. And now what we can also have marked out here as well is basically your previous day highs along with your Monday's highs, which is going to be this 424. So this is what we have here for Tesla coming into market open. We can actually just mark this up and drag it over. So it's your 424. That's your key level that we have marked out. And we also have your key level support being that 416. So for Tesla coming into today, if you want to see some more upside pre-FOMC, you like to see number one, hold above your 416 for continuation back towards the upside. Of course, the best scenario, in my opinion, now is going to be the break above your 424. If you can break above your 424, hold above that level, you can see continuation up and towards your 430 here and above. So that's what we have for Tesla coming to market open. Other levels, if you want to see some downside, which I'm not really a fan of, you could be looking for the break underneath your 416 and really hold underneath your 416 for continuation down and towards your previous day lows and below. But as I mentioned, not as interested in downside just because the overall higher time frame is bullish. If you go on to Nvidia, this one, right, you can see just been staying heavy this week, drop on Monday, another drop here now in the pre-market, stayed heavy yesterday. If we look at this on the higher time frames, we're actually just coming right back down in towards that earnings low. So this is a very key level here for Nvidia. This is also the level that we broke out from last week as well. So for Nvidia, very important levels is just going to be this 172 coming to market open. If the markets do want to drop, Nvidia potentially could see some more downside here. You can see now underneath your previous day lows. So a few scenarios that you're going to be looking at for Nvidia for downside. The best scenario, in my opinion, underneath your 172, you can see some continuation lower, right? So that's going to be key here because it's a higher time frame key level support. Underneath 172, you can see some more downside. As for some upside here, potential bounce is in play off your 172 for a push back up and towards your previous day lows. So that's what we have for Nvidia. But overall, if you go into the higher time frames here, I think the 1 hour gives a lot better of a story here. It's a key level. If you can hold this level, we broke out from this potential kind of bounce for a continuation back towards the upside. Ultimately, if we consolidate in this general area, break underneath your 172, we could get back underneath this key level and we could see some more downside here in the overall market. So key level 172. As for the semis, these ones have been showing a little bit more weakness. So for Nvidia, keep an eye out on your 172 coming into market open. As for Apple, we end up finally having that nice push above your 238. Key levels is your 241. So key level, once we broke above that 238, nice push up and towards that 241 here. Let's go into the lower time frames. Let me do this. Key levels for Apple now coming into today and moving forward is just going to be your Monday's highs. So your Monday's highs is key. Nice push up yesterday, broke above it. We'd personally like to see it maintain above your 238 if you want to see any sort of continuation higher. Now for Apple, primarily what I like to see as well is kind of this cup and handle. Right, nice push up and towards your key level resistance. A little bit of reaction here off your 241. Now what we like to see is really base above your 238. If we can maintain above your 238, start building up these higher lows, we can see this push back up and towards your 241 here and above, but it's going to have to maintain above your 238 if you want to see any sort of continued pushback towards the upside. So that's a key level that I have for Apple coming into today. This is still one of my main watches moving forward, just because the higher time frames is setting up fairly nicely here as well. You can see once we do break above that 240, next levels that I have is going to be your 248 and eventually your all-time highs here. So nice kind of base that we've had. Higher lows have been being built. Break above your 240, we can see some continuation up and towards 250 here on Apple. So that's what we have coming into today and moving forward on this ticker. As for Amazon, not really much to say in this case, kind of just flirting around these key levels that we have marked out. Broke above your 233, kind of rejected off your 236, and now we're right back inside of this range that we have. So not too much to talk about here on Amazon. And the rest of the tickers, to be fair, As I mentioned, just because we do have FOMC, so coming into today, I personally don't have too many setups that I'm looking for. Microsoft, just a lot more consolidation today. As for Google, this key level that we have marked out was your Monday's highs. Immediate rejection off of your Monday's highs and a little bit more consolidation yesterday. So far, still building up higher lows here. So for Google, break above your 252. We can see some continuation up and towards this 255 for a push higher. So that's going to be the key level here for Google. This one still looks very good. If you're looking at this on a higher time frame as well, right? Ever since we've had that gap up with news towards your all-time highs, we've had nice continuation towards the upside. Now this one, if you're looking at this on the daily chart, we are quite overextended. But for Google, as long as you can maintain above key levels, which in this case is going to be these higher lows along with your 248, we can see continuation above your 252 here and above. As for AMD showing a little bit of weakness here. Key levels that we have is your 162. So you can see so far kind of rejecting right off a key pivot point, which is the area of support. Now essentially returning into resistance. For this ticker, we could kind of just draw at this level here. If we can now get underneath your previous day lows, get underneath your Monday's lows, potential more continuation is in play here for AMD towards the downside. So key levels that we can have marked out is just going to be number one, your previous day lows. We can also mark out your low that we created here on Monday, which is now going to be this 157. So coming to market open here for AMD, a few scenarios I'd be looking for some downside consolidation, break underneath your previous day lows for a continuation lower. Another scenario, opening drive play for a push towards the downside right off the bat, or of course, right, previous day low retest for a push towards the downside. So for AMD, I personally like scenario number one here underneath your previous day lows 157 for continuation lower. This one, along with Nvidia, has been showing a little bit more weakness, especially for the semiconductors. We haven't really shown much in the past few months. Ever since Nvidia had earnings, rejected off all-time highs, semiconductors, besides a few other, especially the main semiconductors, have been lagging the overall market. So those are the key levels that I have marked out on AMD coming to market open. And then for some other tickers here as well, Netflix, not too much to talk about, a lot more consolidation. So coming to market open here, the game plan is essentially just going to be waiting for FOMC, right? We have our levels marked out on the SPY and Qs. If we can break outside this range that we have marked out, potentially we can see some more continuation pre-FOMC, but there's a very good chance we just come up, reject off this level, or if we come down, bounce off this level, and we're just going to consolidate pre-FOMC. If you look at the SPY here, similar thing, key levels that we're going to have marked out. It's just going to be the 660 along with your 659. If we just range in between your previous day's range, right? This is, in my opinion, this is a no trade zone in between your 661 along with the 659, at least pre-FOMC. So those are the levels I have marked out today for the both SPY and the Qs. As for my top watches coming to market open, we're still going to keep an eye out on Tesla just because it's building up these higher lows here on the 1 hour chart. But as I mentioned, I'm personally going to be waiting for FOMC, which is going to be at 2 p.m. Eastern Standard Time. So for Tesla, key level 416. As for Apple, higher time frames here as well. Potential cup and handles in play. Key level that we have marked out is your 238, which is essentially your Monday's high here as well. And then for the rest of the tickers, right, we're just going to mark out key levels. But the game plan, as I mentioned, is just waiting, being patient and waiting for FOMC, since essentially everyone's waiting for that. And the overall market is waiting for a clear direction. All right. Let's go over a few other tickers here as well. We'll just mark out key levels. If you do have any tickers or any charts you'd like me to go over, you guys can drop them in the chat now. All right, if you guys do have any tickers or any charts you'd like me to go over, I'll go over them right now. If you guys are enjoying this so far, appreciate if you guys drop me a like. If you guys haven't joined the daily watch list, that one's in the description below. And of course, if you haven't registered for the event that's at the end of the month, you can join the waitlist below as well. All right. Let me scroll up here. Let's see. FOMC big day. Yeah, big day today with FOMC. How come you changed the color scheme of your charts? Is it because green and red are emotionally triggering color slash psychology? That's the most natural reaction. I just like the aesthetic of it, but yeah, green and red, it does play a little bit of a factor into it, right? Whenever you see green, right, bullish, right, it's going things up, right, red, similar thing, the opposite, right, red, bad. That does play a factor. That's just natural instinct. So you can change the chart colors. I know some people do it, some people don't. It's all up to personal preference, really. All right. We go over gold first, and then I'll go over some other tickers. Are you trading weekly or monthly swings today to ride the spike and wave? So today, the key level, the thing is we are at all-time high. So a lot of times you'd be positioned in before FOMC and you look to kind of sell into that FOMC pop. Now, if you're trading, it can go either way. So we'll talk about that here in a second. As for gold, the key levels I have marked out is your 36.76. You can see this is a key level support. Nice kind of bounce coming to yesterday, but now ultimately getting underneath and we're getting back towards the downside. So key levels, or at least next levels that we have marked out on gold, is we can mark out this key low that we have, which coincides with your Fridays, last week's, price action all the way back down into here. So for gold coming into today, key levels that we're going to have marked out is the area that we broke down from, and also your area of support here, which is going to be your 36.57. So for gold, if we can now reclaim back above, potential kind of inverse head and shoulders is in play back towards the upside. If we come up, reject off this level, we're going to come right back down in towards that 36.60 here on this one. Will you hold off from trading at all until FOMC? Majority of the opportunities, they'll come after FOMC, right? I'm not really in a rush. If an opportunity does present itself, right, I'll look to take it, but I'm not expecting a lot, right? I'm not expecting a trending market pre-FOMC. It would just purely be based off a day trade, and I'll be looking for maybe a scalp or an intraday trade for like TP1, TP2, right? The bigger moves are going to occur after FOMC. Let me scroll down. Palantir. What do you think will happen with the news of the drop rate? Certain stocks will go up or down. So we're already expecting, right? Everyone's pricing in a rate cut. So most likely we are just going to continue higher, right? We're going to continue higher as long as markets hold key levels, right? We're at all-time high, so we can expect continuation towards the upside, right? So after 2 p.m., the market's going to be fairly volatile to both ways. It's going to go up, it's going to go down, and then coming into Thursday is going to be key. So most likely, if the market does want to reverse, right, it's not going to reverse. It could potentially reverse on Wednesday, which is today, but there's a very good chance if we continue higher, then potentially we could have a little bit of a sell-off tomorrow, which is Thursday. So we'll keep an eye out on FOMC. Coming to market, later into the day, but there's a very good chance we just continue higher just because everyone's pricing in. And if it is a sell the news event, it's going to sell off either right at 2:30 or coming into 2:30, or it's going to sell off tomorrow. So for Palantir, this one's coming right back into key levels here as well. So far, what we have marked out is your 171.50, and we also have marked out here, which is going to be this 168. So this is a key level here for Palantir. You can see nice base, break above. We're basing once again. What we like to see here now is the break above really this 171.50s. So that's going to be key here for Palantir. You could also be looking for the bounce here off this 168. So you want to see 168 bounce for continuation higher, or now you'd just like to see it above your previous day highs, above this 171 pivot level for continuation higher here as well. Either way, I do like Palantir, nice break above, right, basing above key levels, fairly similar setup to AVGO a few days ago. As for open, This one coming back into key levels of support here as well. But this one, as I mentioned, fairly overextended. You can see it's just in between its range that we created here from last Thursday. So we're still in between this pretty big range that we have created. Key levels that I have marked out is your 860. So if buyers do want to step in, I personally like to see the hold of your 860 and a potential push towards the upside here. So this is going to be the key level for open coming into today. It's going to be the hold of this 860 for some more upside. It very much well could, right? All pops kind of be shorted. If it does want to stay heavy underneath your 860, we could see some more downside back down in towards that 720. So key level 860 coming to market open here for coming to market open on open. That's funny. As for HIMS, key levels that we have marked out is your 56. We drew this out on Monday, and then you can see kind of dropped yesterday while we're underneath its previous day lows. Pretty big drop here for HIMS, and now we're just right back in towards really the area that we broke out from. So for HIMS, really not too much to talk about on this name. Key levels that we can have marked out, just going to now be your previous day lows, which in this case is all the way down in towards that 49 key psych, along with this low that we created all the way back here. As for some more downside, right, consolidation, continuation down in towards that 49, or break underneath your 49 for a push lower. As for upside now, I personally like to see the reclaim back above your 5150. So if you want to see any sort of push higher, reclaim back above your 5150 for a continued pushback towards upside. As for hood, this one's been staying heavy. So this one's been staying heavy. We finally had a nice bounce right off the key level that I wanted to see hit, which is essentially your 114. And then we also have your 117 here as well. So hood was one of the only tickers that was showing strength yesterday after showing a lot of weakness the past few sessions. Key levels that we have marked out is your 117.50, and we also now have your key level support, which is your 114.50. So for hood, kind of just drove up in towards your key level from last week. Now if you want to see some upside, right, break above really previous day highs along with this 117 for continuation towards upside. What's more likely to happen, kind of pop and fade, and we just come right back in between yesterday's range. So for hood, in my opinion, if we trade in between here, it's going to be a lot more difficult. I personally like to see the break above your previous day highs and hold if you want to see any sort of continued pushback towards upside. Big tech isn't really supporting the overall market. Exactly. So big tech, we basically had a tech rotation out a couple weeks ago. So that's why you can see not too many names are at all-time highs, right? QQQ, this is not what you want to see. QQQ at all-time highs, whereas none of the tech names are at all-time highs, right? Meta, not at all-time highs. Apple, not at all-time highs. Amazon, right? Microsoft. The only ticker that's at all-time highs is Google. The rest of the big, at least the Mag 7, are not at all-time highs. And this is a good indication that the market is slowing down, at least the past couple of weeks. And we've been talking about that for a while. Now what we'll be waiting for is some of these names to make a new all-time highs, some of these names to kind of lead back the market towards the upside. And then we'll have some nice opportunities, right? A lot of the opportunities have been happening on things like Oracle or other names as well. That have been moving, whereas Nvidia, right? Nvidia hasn't moved in the past really 2 months. Ever since we made a new all-time highs, we've just been consolidating in this general area. So it's been fairly hard to trade Nvidia, at least intraday wise. We're waiting for Nvidia to break above 184 and start trending towards the upside again. So at least for the overall market, we'll mark out some key levels here and we'll talk about that. Let's see, UNH. As for UNH, nice push towards the upside. Last few weeks now, we're breaking underneath key levels of support, and now this one's just pulling back a little bit. So for UNH, key levels that we can have marked out, I'm just going to mark out now your previous day lows in combination with your low that we created from last week, which in this case is your 338. So coming into today here for UNH, you can see this week has been showing a little bit of weaker price action, push towards the downside here on Monday. Tuesday, push down here as well. Key level is now going to be this previous day low. If you reject off your previous day low, we can see some continuation lower towards the downside. And this is going to be key, 338. 338 rejection. Next level is really the area that we broke out from, which is all the way back down. You can just mark out this level, which is at 333. So potential for UNH to gravitate down towards that 333. If the markets do want to stay heavy, if we end up reclaiming back above your previous day low, potential mean reversion back up and towards really this 342 level here is in play for UNH. As for SoFi, I've been talking about SoFi for a while now. This one, I wanted to see it move towards your all-time highs. Very, very close. You can see higher lows are being built, and this is a very healthy trend. This is a good indication that we're going to have a potential bigger move after we hit all-time highs, right? If we just move up in a straight line, it's eventually going to come back down and have a sharp reversal. But this one has been building, right? Consolidation, building up these higher lows, right? Every single down close candle is being respected. This is a good sign of a healthy trend on the higher time frames. As for SoFi, now what I like to see is really just maintain your previous pivot point and have that move up and towards your all-time highs. There's a good chance we have a little bit of a sharper pullback to shake people out since it came fairly close to all-time highs, and then we end up having eventually that nice push up and towards your all-time highs. So for SoFi, key levels that we have marked out is your 2680s, which is your high from last week on Wednesday. And then we also have your 2630s here as well. Either way, right, SoFi eventually going to hit your all-time highs level, which is in this case, your 2830s here. I'm still waiting for that. I'm waiting for the alert to go up. So that's what we have for SoFi. Let's see what else. BABA, this one has been pushing up nicely in the past couple of weeks here. If we go into the weekly chart, we're going to have to go into this chart here now to mark out key levels, but we've based for a very long time here now on BABA, and now we're continuing to push back towards the upside. In this case, levels that we have marked out is your 162. You can also mark out your 180 and some other levels here as well. So for BABA, let's go back onto this daily chart. Let's actually just remove this. Key levels that we have marked out is your 162.60. We have other levels marked out as well, which is your 172. You can also mark out this, which in this case is your 169. So these are the levels that we have marked out on BABA coming to market open. A lot of the times you are going to have these big market gap ups. So what you want to do as well is you're going to have to base it off of intraday price action along with these pre-market levels. So fairly far away from your previous day highs. In this case, we're going to have to draw these pre-market levels. So for BABA, break above your pre-market high continuation. Another scenario, right, bounce off your pre-market low for a push back up and towards your 170 now here and above here on BABA. How do you mark key levels? They're just always old highs and old lows. All right, let me scroll down here as well. Let's see. Okay. Go over some other names. CRWV. Let me answer some questions as well. Hijack, let's see. Hijack, this morning I can't sign into Discord. Please advise signing into Discord or you don't have any access. If you don't have access, you can reclaim access. It's all just done manually or automatically through WAP. If you can't sign into Discord, that probably is on your end. You probably forgot your password, but everything's fine. As for CRWV, this one still building up key levels as well. So nice push higher. We're eventually going to form now this flat top break, right? Higher lows are being built. What I personally like to see on CRWV, maintain above your 115 and potential continuation above your, hold above your 115. If you can now get that break above your 124, we can see continuation higher. As for Circle, so if you get a direction after FOMC, what playbook should we use for the trade today? So this one is primarily, what you have to understand is that FOMC is a news driver. So whenever we have news in the market, it really has nothing to do with technicals plays a fact into, right, news events, but majority of the times it's just a news event in itself. So technicals, I wouldn't say thrown out the window, but you have to understand the news event, and that's more important than overall technicals in itself. Because let's say, for example, we're pricing in rate cuts. Let's say we don't have any rate cuts, right? That's going to be a lot more important than the technicals in itself. Or if we increase instead of 25 basis points, maybe it's a 50 basis point, right? That's going to affect the market a lot more than technicals. So when understanding news events, number one, it's understanding the actual news event in itself, and then we worry about technicals in combination with the news event. As for Circle, this one is finding a bottom here. I'm not sure where all my levels are marked out on this ticker, but key levels we can mark out is basically the area that we broke down from. In this case, it's your 150. And now we're just going to have to mark out intraday levels here as well, which will be your previous day highs. And we can also mark out other levels here as well, which will be just this 134. As for hood, went over that one. MU, this one looks good here as well. All-time highs on MU. Key level that we have marked out is your 156. So as long as you can maintain above your all-time highs, I like to see this next leg higher. So for MU, kind of similar. Whenever you have these all-time highs pushes, I'd like to see maintain above your all-time highs, dig a little bit deeper, hold above your all-time highs, continuation back up and towards your 160 here and above. Let me go on a few other ones. Went over most of these ones. As for AVGO, do you trade from the trading view chart to see on your YouTube videos, take profit, stop loss? No, that's just for illustration. It's just to make it a lot easier to explain it on the YouTube video, but I do trade on Interactive Brokers, which is the TWS platform, the trader workstation. I know there's some options where you can link it to TradingView, but I'm personally used to the TWS. I like it as well. I know a lot of people just sync their broker directly up to TradingView, but I know there has been some issues. As for AVGO, key levels you're going to have marked out is your 355. Nice kind of break yesterday, but ultimately kind of faded back towards the downside. Now, we're still just going to look for the hold above your 355 for continuation towards the upside. Ultimately, if you consolidate, break underneath, potential, a little bit of a mean reversion back towards your 350. Okay, it's almost 8:40 here now as well. I'm going to go over my game plan once more, and then I'm going to call it a day. Let's see. If news comes out neutral, market might go for a correction. First, it's going to go up before it's going to go down, in my opinion. So for Qs, right, coming into market open. So today we do have FOMC. If you guys are just start joining later today, that's going to be at 2 p.m. Eastern Standard Time. My advice is to be a lot more cautious. If you're going to take any trades today, be on lighter sides pre-FOMC, because as I mentioned, the bigger moves always happen after FOMC. So FOMC is, let me just pull this up, 2 p.m. Eastern Standard Time. So 2 p.m. Eastern Standard Time is when we have the announcement. And then at 2:30, we have Jerome Powell coming on, and he's going to speak as well. So usually the first move is it'll drop right at 2 p.m. Eastern Standard Time. We'll have a lot of volatility, and then the real move will usually happen right once 2:30 hits and Jerome Powell comes on. So key levels that we have marked out is just going to be your high that we created on Monday, along with your essentially your low that we created. Now you can see we have multiple touches. So 590s along with this 592. If we're in between here, I personally don't really want to take any trades. I'll be interested in taking some trades if we break outside this range, either below your 590 or above your 592, which in this case is very unlikely that'll break pre-FOMC. So that's what we have for the QQQ. For SPY, similar game plan here. Key levels that we have marked out, 661. Along with this 659. If we're in between here, I'm not that interested in looking to take any trades. If we can break outside the range, right, that's going to be key maybe later into the session after FOMC for continuation higher, or if we break underneath or 659, potential continuation lower after FOMC. So those are the levels that I have coming to market open. As for my main watches coming into today, I'm still going to keep an eye out on Tesla. After FOMC, this one, higher timeframes are being built. This one still looks good for that next leg higher. Key levels in this case I have marked out previous day highs, and also have marked out this 416 here as well. I'd like to see kind of these higher lows be built for continuation higher. Now it's going to be above your previous day highs. So similar game plan like the rest of these ones, right? Basically inside the range coming to market open. As for Nvidia, this one has been showing a little bit more weakness. So potentially we can keep an eye out on Nvidia for a break underneath its 172. If we can break underneath this 172 here on the higher time frames, potential continuation lower. So that's what we have for Nvidia. As for the rest of the names, right? Apple, this one had a nice push yesterday. We like to just see it maintain above your 238, kind of cup and handle here on the higher time frames for a push above your 241. But this one's going to consolidate a little bit more. Meta breaking out actually looks good here on the daily chart as well. So for Meta, higher lows have been being built. We're holding key levels now as well. Next level, really this daily gap fill plus your all-time high. So for Meta, this one's actually shaping up nicely back towards the upside, finally breaking outside of this consolidation that we have. And you can see kind of buyers stepping in. Now for Meta, we just like to see continuation back up really in towards your all-time high. So for Meta, key levels that we're going to have marked out in this case is going to be that previous day highs. In this case, it's your 780 here. So that's what we have for Meta. As for the rest of the tickers, a lot more consolidation here as well. So most of these tickers are just going to be waiting for FOMC. Google key level is going to be this 253 previous day highs for potential continuation higher towards the upside. So a lot of these tickers, as I mentioned, waiting for FOMC. So that's essentially what we're going to be waiting for now. So that's what we have. And then for the rest of the tickers, similar thing here, right? IWM, a little bit more consolidation. Actually, I'll have to go over IWM for Oracle, consolidation, CRWV. A lot of these tickers, yeah, MU actually looks good above your 156. As for IWM, key levels that we're going to have marked out is just going to be your 239. IWM looks good. There's a possibility that if you can break above your 239, all-time highs is in play, right? Nothing's really happened on this ticker. Just been consolidating for the past couple of weeks. So yeah, that is going to be it for me today. As for the game plan, as I mentioned, be a lot more cautious pre-FOMC. If you are going to trade on lighter size, just because the moves are going to happen after FOMC. This only happens once a month, so it's very key that we have to keep in mind. So yeah, that's what we have for today. Just be a little bit more cautious today. And then if you are going to look for the markets to start trending, do so after 2 p.m. Eastern Standard Time. So that is going to be it for me today. I'm going to get ready for market open here now. If you guys did enjoy that, I appreciate if you guys drop me a like. If you guys haven't joined the daily watch list, that one is in the description. And of course, if you guys haven't joined the wait list for the event at the end of the month, that one is the first link in the description. All right, that's going to be it for me today. Stay safe out there, and I will see you guys all tomorrow morning. All right, take care, everyone. Peace.